Welcome back to IDFC First Bank Presents Leaders of Tomorrow Season 11. You're watching our weekend edition, Super Achievers Making New India, with me, Ritvika Gupta. The spotlight is now on RevFin, a digital lending fintech company that provides loans to people at the bottom of the pyramid. Their typical customer lives in Tier 2 or 3 towns, has no credit history or very low level of education and no banking transactions. To understand more about their business, my colleague Pooja Jain caught up with Sameer Agarwal, founder and CEO of RevFin. Listen in.
The EV industry is one of the sunrise sectors in India and is growing rapidly. EV adoption has led to significant changes in the financing landscape, supporting this emerging technology. But EV financing is still facing many fundamental challenges despite these positive developments. And to solve this problem, RevFin, a leading electric vehicle financing startup, is working day in and day out by financing over 40,000 electric vehicles, creating over 30,000 jobs, and dispersing over 25% of loans to female buyers across 23 states in India. RevFin is transforming India's EV ecosystem. It uses path-breaking and innovative techniques to underwrite customers through its platform in under 16 minutes. RevFin aims to promote cleaner and more sustainable mobility solutions by developing a complete EV ecosystem. Joining us today is the founder and CEO of RevFin, Sameer Agarwal, in a special conversation as part of Super Achievers Making New India, powered by VoiceWhat. Listen in.
Sameer, thank you so much for taking the time to speak with us and for the benefit of our viewers. How might you characterize the current EV financing landscape? Because my understanding is that it is drastically underserved in this country.
Pooja, you're absolutely right. It is very underserved. When we started about 5 years back, there was no organized player in the financing market for electric vehicles. Of course, there are a few players now. And the reality is that if you look at the electric vehicle segment, as a product segment, it is still quite new. Vehicles have not been tested, proven over a period of time.
Right.
Technologies are still evolving. Infrastructure around the vehicles is not fully established, and that could be to do with charging infrastructure, but also servicing, replacement, spares, and so on and so forth. Insurance is not, it's still, there's some work to be done over there. So I think all in all, and there's no secondary market. I think if you talk to financiers, the most important or critical thing is absence of a secondary market, which means if a vehicle comes back, there's no buyer for it and there's no price determination for it at the moment. So I think there are some challenges. It'll take a few years before this segment can be fully established, probably 2 to 3 years from now. Once that happens, I think financing challenges will go away. But until then, there will be challenges.
Well, RevFin Services as a company has lofty ambitions of accelerating the pace of adoption when it comes to electric vehicles pan-India. You've outlined some of the challenges that you foresee you'll face. What are some of the signs for optimism?
Yeah, so it's very interesting. When we started, we looked at the first product we financed was a low-speed electric three-wheeler. It's also known as the e-rickshaw. Sure. It was very interesting. There were almost 2 million electric e-rickshaws on the roads in India, without any structured way of financing available in the market. So we started looking deeper into the segment as to why that is happening. And a few very simple insights came out. First, if you look at small town India, there was hardly any option for last mile passenger mobility. Right. So there was this huge demand in small towns for people to do like small last mile mobility for passengers, going from home to the shop and so on and so forth, or to bus station, train station, and so on and so forth.
Right.
Because of that demand, when people started buying these vehicles and started running these vehicles, the drivers started earning a lot of money. A driver in a small tier 3 town in India makes 25 to 30,000 rupees a month. That's compared to 8 to 10,000 rupees that he could make doing anything else in that town. Right? So his income was going up 2.5, 3 times. Right? So that was the huge opportunity, and we knew that if that is actually happening, there will be a lot of scale. So there's a demand for it. The drivers are earning a lot of money, so they will actually start buying these vehicles. So the scale was very, very clear even initially to us. At the same time, we also realized that it is a vehicle loan. There is a security of an asset, but there's also the security of the livelihood that the driver is making. And then we thought that, actually with this product, a lot of risk mitigation is actually already built in. We don't have to make too much effort over there. So that's how the journey started. And over time, as electric vehicles have really scaled, and now obviously it's become a center of a lot of conversations, we realize across various product segments, earnings are good, but also savings on fuel costs, etc., are much lower. Therefore, net, if it's a commercial driver, they are taking home a lot more money. And of course, it's a personal use, they're also saving a lot of money on fuel cost. Right? So ultimately, the way we think of it is electric vehicle is going to scale significantly, especially in the small commercial vehicle. When I say small commercial vehicle, I mean 2, 3 or 4 wheelers that are sub $20,000.
Well, let's talk more about that, because my understanding, or to my knowledge, RevFin Services has financed upwards of 30,000 electric three-wheelers, and that figure is expected to cross 2 million such vehicles over the next 5 years.
Yeah.
But what's your two-wheeler specific and your four-wheeler specific penetration plan going forward? How does the strategy differ?
We've been in existence for about 5 years now. First 3.5 years, we only focused on three-wheelers. And that's primarily because that was the only electric vehicle segment that was actually scaling. Right? In the last 1.5 years, obviously two-wheelers and four-wheelers are gaining prominence. What we've done as an organization is we focused on commercial vehicles. So for two-wheelers specifically, we've now in the last 12-15 months started scaling it a lot, and we focused on delivery drivers. So these are gig workers who are working with different fleets, who are providing services to e-commerce companies, so food delivery and package delivery and all of those things.
Classic last mile situation.
Classic last mile and hyper local deliveries and last mile deliveries. On the four-wheeler side, there's basically two different categories. One is a passenger taxi, which is still a commercial vehicle, and then there is the small commercial vehicle or a mini truck, which could be mostly for mid-mile or last mile delivery. So those are two segments we are scaling in. And what we've done is, our strategy over there is very simple. Let's partner with a lot of different fleets who provide services to e-commerce companies, and we finance vehicles for those fleets.
Well, what's so remarkable about the RevFin Services model is essentially that you look at such a huge suite of non-traditional data points, right? Whether it's biometrics, whether it's psychometrics, whether it's gamification. But how essentially, when it comes to the disbursement of loans, can telematics act as a barrier for one's appetite for risk or ability to pay back? So,
I mean, at a very high level, when you give out a loan to somebody, you want to look at two things: intention to pay and ability to pay. Right. Now, if I look at our typical borrower, 85% of our borrowers are first-time borrowers. They don't have any credit history. They have no banking transactions available. Sure. 96% of our borrowers live in tier 2, tier 3, tier 4 towns. Right? So access to language, to education, to financial services is extremely poor. They are not necessarily very digitally savvy as well. So whilst they may have a bank account, they may have a smartphone, they don't actually use those things much.
Right.
Right? So the question is, how do you then assess those people or underwrite those people for loans? So we were very clear that we have to start focusing on human behavior rather than credit behavior. So when we started, we said, how do you look at human behavior? We said we'll start doing psychometric tests on users to understand certain personality traits that has a direct correlation with intention to repay. Sure. So that's how we cracked the intention part. Now the next was ability. Right? Ability is, can they or will they be able to repay throughout the term of the loan? A part of that comes from the use case. If it's a commercial vehicle, obviously it's an employment generating asset or income generating asset. So long as they're able to drive the vehicle, they'll keep repaying us. But the thought was, can we actually start predicting that as well? Right? The ability as well.
Yes.
Right? And that's where we started embedding telematics into all the vehicles that we finance. Now we have over 800 million data points or kilometers of distance traveled by our drivers.
Phenomenal.
Right? And basically what that helps us determine is if the customer, if they have a certain, if they live in a certain geography, if they drive a certain type of a vehicle, a certain brand of a vehicle, and a certain technology that they use in the vehicle, and we look at the demographics as well. Using all of that, we're able to predict how much the driver is going to be driving on a daily basis or on a monthly basis. Yes. And we know that every distance or every kilometer covered translates into some earning. We also have a good idea of how much that earning would be depending on the geography he's operating in. Right. So predicting how much he's going to drive multiplied by the amount he earns per kilometer helps us forecast their income. And then, of course, when they start driving, we are able to look at that. We are able to look at the actual performance and match it to what we forecasted.
So against this backdrop, how do you envision RevFin Services growing, taking advantage of what lies ahead? How many crores, essentially, in loans do you expect to disperse over the next 5 years? If I had to ask you to put a figure to it.
So we've always said that we want to finance about 2 million vehicles over the next 5 years, and that translates into 25 to 30,000 crores over the period. So that's obviously a very, very lofty ambition that we have. But I'll also tell you one more thing. We've obviously done a financial projection of where we want to be when, and so far we are actually ahead of our projection. So that gives me a lot of confidence that we will be able to scale to the levels that we wish to. Obviously, that does require the market also to scale at that same pace. We expect, because of all the macro interventions that you spoke about, that will happen. So that gives us the confidence.
And by way of closing comments, RevFin Services, by way of what it does, is making such an impact when it comes to combating climate change, for example, or essentially championing women empowerment, driving financial inclusion, and with that, of course, comes financial literacy. So what's the next strategic frontier for RevFin Services as a company?
You're absolutely right. About 25% of our customers are actually women, which is very, very surprising, especially given that we do vehicle financing. I think for me, when we started, we always said that we're going to focus on customers that are financially excluded, right? So people who don't get access to loans very easily from traditional sources. And good thing we found with electric vehicles is, whilst the customer was financially excluded, the segment as a whole was also financially excluded, right? Because nobody wanted to finance electric vehicles. Right. And whilst that is changing, it hasn't changed completely. As we've progressed, we've also found it's not just individuals. There are a lot of businesses, a lot of fleets, a lot of e-commerce companies that are also starting up. And they also require the kind of support that's needed to start growing their fleets. Right? So from our perspective, we've kind of broadened our horizon and said, look, individuals, yes, but also let's start looking at smaller fleets. Let's try to grow them because ultimately, smaller fleets tend to be 100% electric. Larger fleets maybe have a small chunk of their vehicles that are electric. Right. So we want to promote those smaller fleets who want to be 100% electric, and we actually take a bet on them. We finance their fleets as well. Right? So for me, that is the next frontier, and that really helps us, become a complete financer for all different types of commercial vehicles in the electric vehicle space.
Well, Sameer, thank you so much for taking the time to speak with us, and we wish you and the larger RevFin Services team all the continued success.
Thank you very much, Pooja.
With that, it's a wrap on our weekend edition Super Achievers Making New India. We hope you enjoyed the conversations. Thank you for watching. Goodbye.